What exactly is the stock market? You've probably heard people say things like,
Stock market, the stock market.
Stock market is up very, very big today.
The stock market is a game of expectations.
Well, evidently, the stock market is exhausted.
but what does that actually mean? And why should it matter to you? In this episode of Markets Unlocked, we're breaking down what the stock market really is, how it works, who participates, and how it connects to your financial life. Whether you're new to investing or just want a clearer picture, this is the episode to get you started. Let's unlock the stock market. The stock market is a system. At its core, it's where people buy and sell ownership in companies. Those ownership pieces are called stocks or shares. When you own a stock, you own a slice of that company. If it's a public company, its shares are traded on a stock exchange where thousands of other investors can buy or sell them. The stock market itself isn't a single place. It's made up of multiple exchanges like the New York Stock Exchange or NASDAQ, where trades happen every weekday. Think of it like a giant marketplace, except instead of fruit or furniture, people are trading ownership in businesses. So how do all these trades actually happen? Let's say you want to buy 10 shares of a company like Apple. You log into your brokerage account, place an order, and that order gets sent to an exchange where it's matched with someone selling Apple shares at the same price. This happens in seconds, often through automated systems. Prices go up and down constantly. Why? Because stock prices are based on supply and demand. If lots of people want to buy a stock, its price rises. If more people want to sell it, the price drops. But demand isn't random. It's influenced by news.
Stocks are rallying as Fed Chair Jerome Powell signals rate cuts are on the way.
Earnings reports,
40% in 3 months, up 5 straight months, more than $1 trillion in market cap added since the tariffs took hold.
interest rates,
Friday, the Dow, the Nasdaq, and the S&P.
global
Global
events,
stocks took a hit while oil and gold surged after Israel targeted Iran's nuclear program installations.
and future expectations.
Green light for markets to keep rallying through the end of summer. Let's talk about it.
When investors believe a company will grow, they're willing to pay more for its stock. That's why markets react to everything from tech breakthroughs to political headlines. The stock market isn't just for Wall Street insiders. There are all kinds of participants. You've got retail investors like individuals using apps or online brokers. Then there are institutional investors like pension funds, hedge funds, and insurance companies. You also have market makers and high-frequency traders who help keep prices accurate and markets liquid. Every time you place a trade, someone is on the other side. Sometimes it's another individual investor. Other times it's a large institution with billions under management. The diversity of players is what makes the stock market dynamic. It's a constant push and pull of different opinions, goals, and timelines. Why does the stock market matter? For companies, it's a way to raise money. By selling shares to the public, they get cash to expand, hire, build, or innovate. For investors, the stock market offers the potential to grow wealth. Over the long term, stocks have historically provided higher returns than most other types of investments. It also reflects the health of the economy. When markets rise, it often signals optimism. When they fall, it may point to concern about profits, growth, or stability. Most importantly, even if you're not an active trader, the market still impacts you. If you have a retirement account, a mutual fund, or even life insurance, chances are you're already invested in the stock market. The stock market can go up, but it can also go down. Volatility is just part of the game. Prices can swing sharply in response to unexpected events, like economic reports or global crises. Then there's market timing, which is the idea of trying to guess when to buy or sell. It's harder than it sounds, and even professionals often get it wrong. Another risk is overconfidence. It's easy to get swept up in hype or panic and make emotional decisions instead of informed ones. Honestly, the best defense against these risks is education, diversification, and having a long-term mindset. Getting started in the stock market is easier than ever. First, you'll need a brokerage account. There are plenty of platforms today that let you buy stocks with no commissions and very little money. Once you're set up, you can invest in individual stocks or buy into diversified funds like ETFs that spread your investment across many companies. you don't need to pick winners. Many investors simply track the broader market using low-cost index funds. This is a passive way to grow your money over time without trying to outsmart the market. The key is to start small, stay consistent, and invest in what you understand. The stock market can seem complex from the outside, but at its heart, it's just a place where businesses raise money and people invest in the future. It's where ownership, opportunity, and risk all meet. And it's one of the most powerful tools available to build long-term wealth. Whether you're watching it daily or just getting started, knowing how the stock market works gives you a front-row seat to how the world of money really moves. Good news, you've got the first step down. Be sure to follow Trading Key as we unlock markets, one lesson at a time.